Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, and welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today is January 24th. We have Judd Hirschberg back on the program show. Judd is president at White Wave Trading, a trading company, and our partner for trading research consulting services at Cedar Gold. He has run proprietary trading groups, over 45 years of trading experience, and developed some awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology, and also updates on the financial markets. And today we'd like to understand what Judd is currently seeing in the financial markets across the asset classes and jurisdictions and his outlook for this year. Welcome, Judd.
Thank you, Richard. It's a pleasure to be back. And I'd just like to start off by saying that, your podcasts over the last 6 months have been amazing with your guests and some incredible ideas and the moves, their recommendations and their vision. The moves have been substantial, 25, 30% in some instruments.
Well, that's great. Yeah. Thank you very much also for the compliment. So I was thinking maybe we begin with your views overall, maybe on the equity markets. We can start there, wherever you'd like to start.
Okay. Well, let's just go back and revisit where we left off on our last podcast. Do you see the euro on your screen and the 30-year bonds?
Yes.
Okay. So part of my process is price and events and price. Our last podcast, I was looking for 96.60 in the euro. I was looking at for 103.85 in the British pounds.
Mm-hmm.
And I was looking for this spike in here in the 30-year bonds to reject. Now these are 4-decade levels. These are life of contract levels. This is a Plaza Accord retrace in the yen. That is the life of yen futures. This is the life of the British pounds.
Generational change.
Okay. Now, when we get to numbers like this, they're absolutely a free out. Everybody's been long dollars. You get out of your short bonds. These are 98%. They do not follow through at a level like this. And as a matter of fact, when they get to a big multi-decade number like that, they'll come all the way back on the Fibonacci work, and they'll try to go back to the next major fib, which you've already seen in the yen. That's 150 to 127.5 in dollar yen. The euro, it's already rallied 10%, 12%. So it's already done its move from fib to fib. It doesn't really have to go much higher. As a matter of fact, that around 109.5 to 110.5, I'm looking for it to reject again. And the bonds, this is the half of the life of bond futures. And I use the futures because the yield charts don't line up quite as well as this does. But when you get all the major currencies and the major bond market in the world all doing the same thing at the same time, at the same moment in time, there's a huge sea change happening. And we've seen it. And these are the type of long-term work that I like to follow. I know Ira follows it. The story always changes after the chart changes. The chart changed. Now the story's starting to change. So what's the lagging indicator are the fundamentals, because they're basically what I think is unknown. The price is known. The fundamentals, or the real fundamentals, aren't all the time, because the numbers are lagging. And so we've been having this discussion all last year in the room that at some point, the currencies and the bonds were going to start running the equities. The equities are now the smelly end of the dog. It's the currencies and the bond markets that are moving everything else. And people haven't seen that. You know, this is something that you saw in the 80s and 90s. You know, people that are new to trading have no concept of this. And they've never seen the volatility in the currency markets. And today was just one more day where, you know, the dollar went up as the bonds went down. And as soon as the bonds found some footing and went the other way, everything turned around and went the other way with it. So the algos are all in tune with it right now.
Yep.
And I can give you one more example here of how I can use some of these indicators, the currencies, on shorter time frame basis. Last week, when the Mexican peso came down to 1852 to this $20 high, I told everybody to be short the indices, don't be long.
Yep, I remember that.
Had to bounce.
Yeah.
So you had a couple of day bounce off the level, and now it's strengthening again, trying to retest it. So I'm always looking for the currencies to tell me the capital flow, and as the peso has strengthened, guess what? So is the Mexican stock market.
Yeah.
So I always have an eye on the currencies and the bond markets.
And would you say the Mexico currency and market are also sort of indicators in the emerging market space? Like, could you look at other emerging markets as well?
I think that's all part of, I can go through them right now. I mean, it's all part of that relative value trade between the US and all the emerging markets. And I mean, Louis Gabb's been all over it, Faber, all your guests. That's all they've been talking about for the last 5-6 months.
Yeah, Caroline Miller also. Yeah.
Oh yeah, all of them. Caroline Miller. I mean, they've been so on top of this, and you really have to pay attention to what they're saying, and have the ability to see these markets. Okay, so we can go through them one at a time, because I lined them all up here. And we'll just kind of go through them. This is long the SPYs, short. What is it? EWM is Malaysia.
Yeah.
So Malaysia has been, since November, has been doing nothing but gaining on the US. So it's got room to come down to, the spread's got more room. Just to get to basically halfway back for the last 2 years. And most of the swings that people are going to be looking at are the 2020 low to the 2022 high. So I'm just kind of waiting for the next leg. And that's why when I look at the S&Ps, I just think that it's a trade. It's not an investment. You can sell the rallies, you'll make money. And when the S&Ps get really sold, I think you're going to have people coming in and buying individual names on a relative value basis, and you'll get bounces. I just don't think we're going anywhere yet. So I'm just staying flexible with it. I know everybody's got way different targets, and I want to just let the market tell me what it's going to do at this point, because I can't listen to it anymore, Richard. I turned off the TV.
Yeah, we were talking just before the podcast on some of the analysts calling for 3,100 in nominal terms, but maybe it doesn't go down there in nominal terms, but in real terms, you know, against commodities or inflation adjustments.
Yeah, and here's Louis' call when he was on your podcast last year, and even the recent ones in December, and he's been on the same thing. I mean, this is you have to look at where the money's going, and this is all out of the U.S. and this is all into China on a relative basis. It's been a big move. And there's more. There's room left in this. I mean, even if it came back to its annual or semi-annual mean, it's got a long ways to go.
Yeah.
When you get something like this going, we're basically at, you know, its first inflection point here on Fibonacci retracements for the life of the spread. But it can, you know, it's going to go from one level to the next. And I'm not looking for a turn here in that. And here is, let's go look at the S&Ps versus Hong Kong.
Hong Kong, yeah.
So there's monthly, quarterly, still has room. This goes back to 96. So most of these ETFs only go back to 96. You know, my futures charts go back to the 70s.
Okay.
So I like looking at the futures charts, and most people, when they're charting, they make a big mistake, and they don't find the data set that goes back the farthest. So it's, you know, it's US session S&Ps, which CQG keeps up for me, and as a courtesy to IRA, because we want to keep that data set viable, because all our relationship spreads go off of it. So, you know, here on the semi-annual, we've already gotten to our first momentum level. And, you know, this might, and we're at the 98 high. So this is an area where it's going to have to do a lot of work before it makes another move.
Okay.
And this is US versus Mexico. And Mexico's still gaining. And that's why I've been following the peso closely, because this is, you know, as the peso has been strengthening, that money's been going in the Mexican stocks.
Yeah.
So what's his low? All right. So here, let's just take this. Let's take a quick look at this. This is here. This is a couple of decades. This has got farther to go. It's not going to stop in here. Yeah, it's going to come down into here or pretty close. And this is the short swing. This isn't even the life of the contract. And you'll notice that I'm only doing these Fibonacci retracements on very, very long time frames.
Yes.
And the important number here is going to be right here, right at the half. You know, send that to myself. Because this is gonna be a wall right here for two reasons. One, it's the opening range
Back there.
of the contract,
Yeah.
matching Fibonacci a half of the last 2 decades. So that'll be a place to take off the entire trade
Hmm.
and look for a bounce all the way, a bounce coming back up.
Yeah.
That's going to be a free out right there, anywhere in there.
Yeah.
This is long S&P, short DAX. So the S&Ps have just started. This is a daily this week, showing some life against the DAX. And this is half of the, what is that? Well, it's a 2015 low. I think that's what that swing is. Yeah, and I think that what they're measuring is a 2020 low. Not sure which one. So the cloud, that green bar right there is basically a 50%. And I was just trying to figure out where the cloud measured it from. But it's already come into support, so that's a bounce zone.
I see.
Let's just take a look at the longer time frames. And you look at a longer time frame, I mean, there's more room. And then the other one is
Yeah, Europe was pointed out by Louis Vincent Gave, especially in connection with like European industrial and engineering firms, together with Japanese industrial engineering firms working on China projects.
here we go. And this is S&Ps against the FTSE. So I just wanted to see what that looked like. So the only one worse than us is England. And here's the S&Ps against the Nikkei. And the Nikkei, I believe, should probably come back down. It looks like it wants to strengthen against the S&Ps a little bit more. But this is a fairly significant high from October 2012 in this spread.
Uh-huh. Wow.
We came up there on a quarterly basis. We've never closed above it. That's a big rejection. Now it's starting down again. And I know that Ira was looking at the Japanese banks, and some of the other guys were, and Mark Faber, Mitsubishi, and a couple of the other ones, and they're all doing really well.
Yeah. Interesting. And also you'd mentioned about the industrials, sort of Caterpillar, Deere, that category.
Yeah, I mean, that is just, there's nothing bearish about that. I mean, the targets for this are much higher. You're looking at basically just over 300 in Caterpillar for this swing up. And you need closes back under 247 to negate that target, or at least negate it in the short term. Deere's not really getting there, but in today's action, Microsoft report, would be interesting to see what their conference calls like later, because in the aftermarket, they were above their 200-day moving average, and now they're coming back down again. You're trading around 251.70 offer. So I want to see how this opens tomorrow.
Could affect the market in a more general sense, yeah.
And you have Tesla tomorrow, so if you have a big up and a failure on that, then you get a midweek high and people start selling it again.
Yeah.
So, my rule's just taking the money, staying really flexible, and just looking for singles right now.
Mm-hmm. Can we take a look at some commodities like oil, copper, and gold?
Sure. All right, let me, let's just stay on this page. Okay, so we can just go through some of the gold charts.
Yep.
This is gold denominated in dollar yen, and it's hit its first extensions here, and technically it needs higher to get going, and that technical number is 19. It needs a good weekly close over 1942.
Mm-hmm.
And then this can start again. And this is not a long time frame projection. This is just a short swing in gold, dollar, yen. So every time we look at a commodity, we'll look and see how it's denominated. Here, this is gold in yuan. And this is really bullish. I mean, this is back above this, July 2011 high, and it's going. There's the 88 low where it broke out from. So we basically do this with everything, with oil, with all the grains. We denominate it in the different currencies, and then we take a look at it on the different time frames to see how it looks. Here's gold and euro. That's an annual chart. I mean, that's bullish.
Yeah.
It's held up nice on the quarterly. And as long as gold stays above 1900, I'm looking for higher at this point. And I'll show you why off my long-term point and figure in a minute. I don't think it's going to break down, but you still have seasonality working for you for a little bit.
A few more weeks.
Here's crude and yuan. So you can see that there's less demand right now for crude basis, the yuan. There's crude and hold on. Well, if I could type, we'd be in good shape. There. So even crude against in yen terms, came up to some short-term resistance and is just backing off a little bit. And I just like to look at these charts to see if there's a big move starting. Here in June, when you saw this weekly breakdown, that was the high in the oil. So I like to look at the I like to look at denominated in other currencies for confirmation that the straight oil is breaking down, and there's the same chart. So, it's a really great exercise to kind of focus yourself on what the capital flow is doing. And right now, here, copper against the bonds. When we got this ORL month in copper bonds, that lined up with the S&P chart coming down. Came right down to the 200-month moving average, and now this is getting overbaked on the upside, and it's coming close to momentum resistance. And I do this. We do the same thing in the grains. So there's soy and yuan, and that's backing off. I need the soybeans. They're still holding short-term support, but I need the soybeans to close over a weekly close over $15.41 to start another leg up. Now we're into some support, but the grains are funny in that you have to look at an active daily continuation, which is the high volume front month, which doesn't look all that great. You can come down more. You have to take a look at the straight March contract, and you have to look at a daily continuation, and you can see where it spiked it last Wednesday, and that's when I wrote the piece that I was monitoring this for a breakout. Now, typically, when you get this move, an ORH at the top of a move versus the bottom of a move, they generally don't work. So, you know, they took them up on the, I think there was a crop report that day. And then they just rolled over and came back down. But you needed a close over there to confirm that, and you did not get it. So there's soy and yuan. You can see that you're not getting any Chinese buying, looking at that chart. At least not yet. And I still think you can get a bull market, but you're going to have to wait a while. You might have to wait until May. Corn and yuan. See, let that see if that wants to populate for us. There's the wheat. And the wheat doesn't act very well. So you're not, all this shows you it's a relative strength chart, and you're not seeing the demand out of China presently in the chart.
Yeah.
That's all it's telling you. Now here, you know, here are the beans in real. That's rolling over too. So, you know, this can come all the way back down into here. So some of these things you have to, you know, you just have to wait for them.
Yeah.
And so that's why I have all these relationship spreads up, and I have all this pattern recognition with, I don't know, I have thousands of instruments in here that my system just monitors, just to tell me whether I should look at it or not.
Right. And what about in the bond market, like interest rates, yield curve, any trends that you see there, anything forming up?
Yeah, let's go over the yield charts, because they look different than the futures charts. What I've been focused on right here, this is the I was looking at the short end of the curve, which is the 2s and the 5s. And I just think they're stuck. The 30s went to the bottom of the semi-annual cloud. That lined up with a half of the life of the 30-year futures. And now we backed off. So when you're looking at charts, they can be really useful, but you have to look at the right ones. So that means you have to go through all your time frames, and you know, I go all the way out to life of contract if I can get it, so I can see if it all lines up. And what shows you weakness is at the beginning of the year, the bonds started to rally and came back into this cloud, which you're looking for lower rates. Now, potentially, this could be, we could go to 140 in the futures. I just want to see, or it can hold in here and go the other way. I'm just using it as an indicator at this point for the metals and the dollar on any given day. So you can see today, we had an ORH day in the 30-year bond futures. I wouldn't take that signal. And why wouldn't I take it? Well, here. Because here's a daily. In the yield. And that doesn't tell me anything. That tells me that you got a chance you could follow through a little bit. It could just as easily come right back up. So I don't think the risk reward after you don't have any trade location and the risk reward isn't worth it. And I don't have a good enough view on what I think the rates are going to do to trade it. Here's the 530 in futures. Looks like it wants to, the 30 wants to gain on the fives. Here's the 210. I can make a case that that's it right there. And it's going to reverse tomorrow.
Right.
So, I look at.
Not really confirming.
Yeah, if I don't get confirmation, you just.
Yeah.
And so what I do is a little time consuming, but the quality of the signals when they line up are great.
Yeah, much better. Yeah.
Especially if you see a signal, not a straight gold signal, but a gold in yuan or gold in euro or gold in yen. It's a much better signal if you see it there first than you see it in the dollar denominated gold futures, because it's always gonna you'll see it there first because the demand's not coming from the US. It's coming from central banks and other people outside the US.
Mm-hmm. Great. Any final thoughts or other observations?
I just think that you're prudent to take your money this year and not get opinionated, because I think that the story is going to continually evolve and continually change. And, somebody's always going to know more than you. And, it's just like last week when the Davos crowd basically said, oh, no recession. Okay, so we rally 160, 60, 70 points in the S&Ps. Okay.
Yeah. Yeah.
And next week, the week after, it can be totally different. So yeah. I'm just going to look at price. And I think that's the most important thing right now. If you don't have any risk management, you don't know where you're wrong, don't do it.
Yeah. Great. And could you put back your contact details? How can our listeners and viewers learn more about your work and get in contact?
Can you see that, Richard?
Not yet. No. Yeah.
Okay.
Yeah,
all right. So you can get a hold of me at whitewavetradingstrategies.com. And that's my direct email, Judd at whitewavetradingstrategies.com. And if you want, we have I have a virtual room, runs every day from 7 a.m. until 3, sometimes 4 o'clock in the afternoon. We've got traders of all ilk. There's RIAs, there's hedge fund guys, there's market makers, There's corporate executives that come in and out. Ira comes in and out. The conversation, and people all over the world, the conversations are usually pretty interesting. And it's
Yeah,
a global
fascinating.
macro room, and you can ask any question you want.
Yeah. Yeah, it's totally fascinating, very insightful, all kinds of different perspectives.
So if you just come and click on the website and put your email in, that's all you have to do, and you'll get an invitation to the room for the next 30 days, and you'll get sent my written research for 30 days.
Yep.
So once again, Richard, I want to thank you. It's always great to catch up. And
Yep. Awesome. Yeah. Thank you so much, Judd. That's great insight.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.